Salesforce laid off hundreds of employees this week as demand weakened in some countries for the software maker, becoming the latest in a growing list of tech companies to cut their workforce. This one caught Brian Sozzi's attention, and that's where we find his take today.
It caught my attention, Brad, because similar to Meta, you don't normally see companies with this much cash, this much consistency in their business lay off workers. But a source tells me Salesforce laid off, let's say, about 1,000 employees this week. And I can't say I'm too surprised. It has been a little slowing in the enterprise demand for various Salesforce products of late as the economy has slowed. And also, this is a company that has bought a lot of businesses in recent years: Slack, MuleSoft, Tableau. So there's a lot of employees inside of this company. Quick graphic here on why this might make sense for Salesforce in terms of why they're doing it now. Like I mentioned, they have bought a lot of businesses in recent years. There's probably some fat inside of the company. Enterprise demand has slowed a bit, as I just mentioned, and must gain more credit with the street on margins. And this comes at a time where the company, Starboard, I believe, recently took a stake inside of Salesforce, noting that there is potential for them to improve the margins in their business. Now, I did ask Salesforce co-CEO and founder Marc Benioff just a couple months ago at Dreamforce about the company's commitment to improving margins. Take a listen.
For us, I think that the market doesn't fully appreciate how committed we are to growth and margins. It's also why we have announced a great new lead independent director yesterday, Robin Washington. It's why we announced a $10 billion stock buyback. It's why we announced a clear margin target at 25%. It's why we confirmed our $50 billion revenue number, because I don't think that the market and the investors fully appreciate it.
And I do think Mark and his co-CEO, Brett Taylor, they are serious about improving operating margins in this business. And a chart here from Jefferies underscoring the potential for Salesforce to really close that gap in terms of operating margins versus others in the space. Now, they're not going to get there entirely by laying people off, but I think as the business kicks back into warp speed overdrive, as we start to get out of this economic slowdown, plus some of these cost cuts and maybe more to come, you could start to see that gap starting to close for Salesforce. And my take is this on the company: right moves at the right time for Salesforce. That's me and Brad in the cloud using our cloud software. Let's say it's from Salesforce.
Let's say. All right. Even though
I love the debut of the Brad Smith icon. This is great.
I know.
I love it.
How do they draw these?
How do they draw these?
It's incredible. It's really good. He even has a good lineup too. I like that.
I hate that you look younger than me.
I mean, well,
you are.
Yes.
You are.
But I think with all that we've seen in Salesforce, and in ERP names specifically, Salesforce is down, 53% from the November highs last year. Yeah. And it's been a tough road, but it's also the environment that we find them in right now, too. When you have this many companies that are saying that they're pulling back on their spending, and that's not just in headcount, that's in other areas of the business, that can certainly hit on the growth opportunity in the near term for us.
Right, and it's not, we talked about with ServiceNow, too. It's just growth is slowing. This is a company still growing double digits in terms of sales and profits, just that the valuation has come in and the economy has slowed and the stocks are going to get hit.
Absolutely.